crypto markets correct with risk assets, but volatility stays muted. Some bullish signs emerge as correlation to stocks fall, and derivatives markets show that investors may be well protected as put skew catches a bid. All this and more in this week's Crypto Insight. Okay, crypto this week. We had a pullback finally. I mean, off that really impulsive move higher that crypto was having, and it was decorrelating from risk assets, which, you know, was getting the bulls very excited. We kind of hit that top resistance level, and we finally started to move in tandem with risk assets, right? So, you know, the macro risk associated with a hawkish Fed, the Bullard comments, the high inflation data, and the Russia-Ukraine potential escalation or fears of escalation, that was too much for crypto to handle. And that took us down a good 10% off those highs, right? Now, there's been some speculation that people are saying that crypto has become more correlated to gold and less correlated to equities now. It's going to catch a safe haven bid. Personally, I think we don't have enough data to make that claim, right? I mean, 1 or 2 weeks of data, I just don't think you can make that claim, right? So I would be shocked to see, you know, crypto really trade like a safe haven. You know, yeah, I just think it's quite far-fetched right now. You know, 2 months down the line, if Russia, Ukraine is still bothering us, and equities have been trading lower, and gold and crypto have been moving in tandem for another 2 months, then maybe I'll believe it. But right now, I think that narrative is utter rubbish. That's my personal view. And then, you know, what else? This latest kind of headline on Russia removing troops has seen a nice bounce, right? So we bounced off that 50-day moving average on Bitcoin. And we are, you know, having a nice rally, arguably going to retest that top. Now, if we can break that, then a move to probably 48 is quite likely, which is like now the main hurdle. And then a break above 48, and then it's game on, basically, right? The bulls can really have a go. Right, so that's the thing I'd be watching for. And risk assets have got some decent upside potential, right? S&P back to 4,600, another what, 3%, probably does take crypto up another 5 to 10, right? So that's, I would, and then that correlation that you're talking about not existing is clearly back on the table, right? So I think that scenario is definitely possible, and one to keep an eye on, right? I was looking for a down move in crypto towards that 30K area. You know, I think February is the time for it to happen. But if this Russia thing goes away, then maybe we don't get it, basically, right? I don't know what the next catalyst is going to be for that downdraft. You know, I would argue that the move down that we saw in equities was quite violent. Crypto did pretty well, right? Crypto, on a relative basis to what you would expect crypto to do, it actually held up quite well, right? I don't think it held up because it's a safe haven. I think it held up because a lot has been de-risked already, basically, in crypto. Yeah. And so there wasn't people needing to puke it as much, right? That's kind of, and some of the on-chain stuff is kind of pointing to that as well, which we'll talk about. If we look at Ethereum, similar sort of chart, right? I've put this resistance band as key, 32.80 to around 34.25. I think that's the big area of resistance. If that breaks, then again, Ethereum, you know, is definitely ripe for another break higher. Targets are going to become around 38 to 4,000 probably is the next obvious target if that resistance area breaks. Yeah. The ETH Bitcoin spread isn't really telling me much. You know, maybe it's got a bit of higher lows it's put in. That maybe that's a bit bullish at the margin, but there's pretty strong downtrend still here that it needs to break. So I kind of put it in no man's land right now. Yeah. So I'm not getting overly excited about it. Okay, so that's kind of what I'm looking at in terms of charts. In terms of the on-chain metrics, I would say that, so we've got the futures open interest leverage ratios come down quite significantly, okay? So we've got different bands here. It's kind of in the lower end of the middle range. So what does that suggest? It just suggests that a more stable leverage ratio means there's less fragility to a large liquidation move, okay? in either direction, right? So if anything, it just means, maybe less realized vol ahead, given that people are de-risking, right, their futures positions. So that's one thing. Then you've got the top right chart showing put call ratio been rising all year. So that's a sign of, investors using more put protection to hedge macro risk, because clearly the macro risks are increasing, right? So you're seeing a maturing market. You're seeing investors who are not afraid to add puts to protect their holdings and things like that, right? Again, so generally when you're seeing investors buying puts and being hedged, and we're also seeing that in the fact that put skew has been going bid relatively, it means the risk of those large crashes kind of goes away because people are protected and they don't need to puke it as much, right? What else? We're seeing exchange net position changes showing continued outflows, right? So those are persisted for quite a few weeks now. Okay, so generally when you get this much outflows off exchanges, it tends to be price supportive, as it shows people are not in a rush to sell their coins. But there may be some other dynamics going on under there, but in general, it's not a bad thing to see that, right? And then it makes you think, it's not people are just piling coins onto exchanges ready to hit the sell button in any sign of danger. Okay, which is what you might see if the market was a bit more nervous. And then the last chart kind of shows you what the short-term holders have been doing recently. And this kind of shows that short-term holders have managed to accumulate some coins between 33 and 44 on that latest down move, and they are now in profit, right? So if you've got some short-term traders who've managed to pick up that dip, and have a cost basis somewhere in the 36 to 3,800 area, then arguably they don't need to sell this stuff until we go back down there. So you might have like a stop order in the market somewhere in that 36 to 38 area. But as long as we stay above 40K, that stop order doesn't need to get hit. And the market's kind of free to rally, basically, right? Because these guys have made a bit of profit off that buy the dip purchase, basically, right? So that's kind of what I'm seeing in the on-chain stuff that caught my eye. If we then go to the crypto vol analysis, I would say these charts. So we've got the term structures and how they've been moving. So week on week, both Ethereum, I've got Bitcoin on the top and Ethereum on the bottom here. So we've got pretty much a parallel shift down for most of the curve in about order of magnitude of 1 to 2 vols. So that's pretty minor, to be honest, in terms of a vol move. We have seen, the absolute front super short dated weeklies get a hit on Bitcoin, and then maybe go a bit on Ethereum, right? So people may be favoring Ethereum gamma to Bitcoin gamma, okay, which makes sense because it has been out realizing. If you look at what the implies did over the week, though, so this was just a week on week change in the curve. If you look at what the individual maturities did, same story we've been seeing week after week. We get the DOV auction, so that short dated, particularly the weeklies, get smashed by the order of magnitude of about 10 vol points. That happened on both Ethereum and Bitcoin. And then you have some random thing that comes along for the mean reversion of the vol to go back to where it belongs. That, in this case, was the Russian invasion fears, which actually gave you a reason to spike it. So that vol went straight back and actually went higher. So whoever bought that DOV auction with the vols down there did pretty well because they managed to, pick up a bit of a bargain down there, basically, right? And they paid their theta bill. Their weekend theta bill got paid pretty early by the looks of it, right? When that down leg happened on the Russia fears. Yeah. If we then look at realized charts, we had been seeing, quite consistently realized trading above implied. And we've been saying the reason being that implied is trading too cheap because of the overwhelming supply we're getting from the DOVs, right? Now, this week, we actually saw the market not really realize, because despite that move on Friday late, where we did get a bit of a sell-off, over the week, we haven't really seen massive moves in crypto, right? As the market kind of stabilized at the higher level. So, you can see here, Bitcoin realized at around 40, with implieds at around 60, and then Ethereum kind of equal to its realized, sitting at around the mid-60s, basically, right? So despite the Russia news, on the week, the 7-day realized hasn't really popped that much in crypto, right? The vol reaction in crypto has been a lot more muted than you would have thought, right? And I think that may be to do with the fact that the risk in that market that market participants are carrying has been de-risked quite a lot. We've had quite a lot of time for people who are not comfortable just closing their eyes and hodling to kind of get out of their positions or buy puts or wherever it is. And that protection buying and that kind of shift, de-risking in the market has maybe taken some of the sting out of the down move when we've had a bit of a negative news catalyst, right? So that's kind of how I would read that. And you know, on that point about, you know, put protection, we have seen a move in skew this week. You know, skew had, after the rally, skew had kind of moved more neutral, where we saw that up move there in the previous week. And all the skews have kind of gone to quite close to zero. And now we've seen skew again shift back towards puts as that war fear emerged, where, you know, especially the weeklies went as far as kind of 5 vols again for puts, but everything kind of trending towards the puts again, basically, right? But that makes sense. And I kind of said when that skew flattened last week, if you want to hedge macro risk, which there clearly is still a lot of, buying crypto skew makes sense, right? You know, especially in that slightly longer end of the curve, where it was down to about 1 vol, that has started to richen up and is kind of now trading above 2 vols in that 6-month part of the curve, basically, right? And I think it makes sense to own that skew. I'm actually using some 6-month some June risk reversals to protect some of my crypto holdings, because I think by the summer we could have some pretty bad bouts of volatility to the downside and I don't really see us breaking, like, you know, 6,000 on ETH in short order, basically, right? That's kind of how I think now. If we broke 3,500 sharpish, and for those who have kind of watched my Bitcoin cycles video that I did with my friend Kuda, there is a bit of a kind of cyclical bullish dynamic coming post-February. So February to June, there may well be a rally. Don't know how violent it will be. I'll be surprised if Ethereum breaks 6,000 in that period. But, you know, if the price actually starts to look strong, I'll address that, right? But right now, I think having those hedges in place in the longer part of the curve, I'm more comfortable with, right? Being short a ton of, you know, 3,200, 3,400 calls in the next month, I don't think it's a great trade right now. I actually used that dip yesterday to cover some short calls that I was running in Ethereum, because I did think a snapback could come if this thing de-escalates. But like I say, slightly more longer term, I'm comfortable being short like 6,000 type strikes and stuff like that. I think that's okay to use as a bit of a hedge to then be able to own puts to the downside that protect you from that bigger drawdown that comes on the macro risk later. Yeah. So that's what I'm seeing. So then the other thing to talk about is flows, right? What have been the main flows? So obviously I love this chart from Genesis. This is the block sniffer. Now, the way I've done it here is I've broken it down into short term and long term. And I think that makes sense because of the way the DOVs are just so dominant in the front end. Okay. So I've got on the top, I've got the Bitcoin broken down into short term on the left, long term flows on the right. And then below that, I've got Ethereum short term and long term. And then I've highlighted the flows that particularly stood out. Okay. So, you know, you can see here in Bitcoin short end, 1 to 2 week maturities. So Feb, 18th of Feb, 25th of Feb, we were seeing a load of 41K versus 38K put spreads being bought. So that started to happen late on Friday, where people piled into those. So that accounts for some of that flow. And then the rest of it is kind of going to be DOV driven flows, basically, right? So you can think of a lot of that as kind of vol selling coming from DOV hedging. And then inside that, the 41, 38K put spreads were bought as a bit of a protection trade, basically. And that happened late on Friday. If you then look at the Ethereum short end flows, same thing, you would have seen some kind of hedging on the DOVs, but the big clips that we saw were, again, put spreads, 28, 25 strikes being bought for that down move. And then here you've got calls and puts of the 3,200 strike being bought in about 10,000 contracts, right? So that was a straddle buyer that was trying to pick up gamma in that front end on the 25th of February as a way of protecting against, you know, a bit of a crash on Russia, basically, right? So, you know, thinking that that's good value gamma, it's been realizing more than it's been implying, it's oversold on the DOVs, I'm going to buy a load of straddles. That trade hasn't actually made a ton of money for that person by the looks of it, but I can understand the rationale. in general, Ethereum Gamma has seemed to be quite cheap over the last few weeks. So if you think there was going to be a bit of a crash coming, it's not a bad way to play it, basically, right? And then on the longer term, pretty much the same flows that we're getting are June call spreads across Bitcoin and Ethereum. The strikes of choice to buy have been the 40K and the 45K, and selling is 65 and 70K. So like I said before, if you're going to get bullish crypto, you're going to try and buy yourself a bit more time for the market to actually break higher and get some momentum. So you're going to be looking further out to maybe June in those call spread type structures that you're buying, basically, right? So that's what someone did in some reasonable size, middle of the week. And same story on Ethereum, buying the 3,000, 4,000 call spreads in Ethereum. And then also, if you look longer out, like some September 5,000 calls are also trading, things like that. So that those bullish flows definitely seem to be, like I say, parked in June or longer, which I think kind of makes sense as well. Yeah. All right. And then the last thing I want to show is, because we keep going on about the DOVs, right? And I've actually been kind of speaking to some of these guys and getting a bit more involved with the DOVs. I am planning to maybe get involved in a bit more meaningful way on DOVs, certainly helping with the development and education around them. So this chart is a chart I've taken out of Friction's weekly newsletter, Friction being one of the DOV providers, okay? And they put out Medium articles once a week, just summarizing what's going on, because, you know, they're a new up and coming sort of outfit, right? So they want people to be involved and seeing what they're doing. So they've basically wised up to the idea that everyone's front running their flows, right? They're coming to sell a load of gamma, and if they sell it at a telegraph time that everyone knows, they're going to get a horrible fill, because market makers are just going to drop the vol down, scoop it up at a nice cheap level, and then remark it in their face, right? And they won't get a good level, okay? So what Friction have started to do is they've changed around their auction times. So what these show you for both Ethereum and Bitcoin, they show you the implied vol for 10 delta options, which is kind of the area that these guys are overwriting, okay? And they show you what that volatility did at different times around that Friday auction date, right? So you can see Friction's auctions, which are the black dotted line and the yellow dotted line, they've moved it, rather than doing it at 8 in the morning or wherever, when everyone else was doing it, around that deribit expiry, they've just moved their auctions either earlier or later, okay? And by doing that, they've actually managed to escape the vol crush that happens, basically, right? So they've ended up executing their vol sales at a much better level, because they've been savvy to the fact what the market makers have done, and they've just changed their timings, right? So clearly that's been a success, and they saved themselves about 10 vol points in both Ethereum and Bitcoin vol, right? So they're the guys who are putting the money into their vols are pretty happy with that execution, I would think, right? So I would say that's quite interesting, and I think if more and more vol providers start to wise up to that and do similar things, what they're going to do is they can start chopping up their execution. So rather than doing it at the same time, all the size in one go, they're just going to do like a VWAP, right? They're going to do a volume weighted average price type thing. They're going to do it over stages, over the day, change up the timings, whatever it is. And I think that's going to help make the vol less jumpy. So we're used to seeing the vol really jump down 10, bounce 10, whatever it is. It will just kind of smooth all that out. And I think that's what we're going to see going forward, basically, right? But interesting to see how quickly these guys have kind of cottoned on to what's going on. They've analyzed the data, they've seen that they're getting front run, they've seen that it doesn't make sense, and they've adapted and evolved, right? And that's what I love about the DeFi space and just crypto in general, that they're innovating new products, but they're looking at the data, they're analyzing it, and they're trying to get better and better and better. And I think that's pretty commendable, and that's why these are the type of guys who I'd be happy to get more involved with, and I probably will be speaking to them more and more. Yeah. All right, that's pretty much it. Actually, last thing to mention is in terms of what I've been up to in my crypto positions, nothing major. The only thing really that I did was I had some Solana call ladders when the market dipped yesterday on the Russia stuff. I just bought back the short legs of the call ladders. They were next to nothing. And now I've got a naked call end of February. So 25th of February, naked call, 120 strike. Just running that naked see if crypto can have a little pop, basically, right? But outside of that, nothing major changing in my crypto options position. All right, that's it from me. Let's hand it over to you guys for questions. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.